Hey guys, welcome back. Continuing with the 2022 ETF Overview series. Today we are looking at a pretty well-known one, NOBL, N-O-B-L. That's the S&P 500 Dividend Aristocrats ETF by ProShares. Just real quick housekeeping note. I was going down this list by assets under management. I think starting next week, I'm just going to go randomize, look at my list, and pick ones that I think you guys might enjoy, because it seems like nobody likes the biggest and the best. I'm just kidding. But anyway, S&P 500 Dividend Aristocrat Overview. We're going to look at how the index is constructed, just a quick summary, expense ratio, portfolio holding sector allocation, dividend growth, and performance. So let's get going. So that ticker is NOBL, and that's the S&P 500 Dividend Aristocrats. Now, we all know what an aristocrat is, and if you don't, we're going to tell you right here. The S&P 500 Dividend Aristocrat measures the performance of companies within the S&P 500 that have followed a policy of consistently increasing dividends every year for at least 25 years. Now let's take a look down and see what the eligibility is. Be a member of the S&P 500, basically is what we said, have increased total dividend per share amount every year for at least 25 consecutive years, have a minimum float adjusted market cap of at least $3 billion, and have an average daily value traded of at least $5 million for 3 months prior. Now, someone asked me before, what happens if there is not enough stocks, because this needs to have at least 40. The index is designed to have 40 companies. What if there aren't 40? Well, where'd it go? Did I just walk right by it? I think I did. There it is. At each annual reconstitution, the minimum number of stocks is 40. So if they don't have 40, what they do is the S&P 500 stocks with histories of increased dividends of more than 20 consecutive years, also satisfying the criteria on market cap and liquidity, are added in decreasing order of dividend yield. So it's something like the video we did on SDY. They look at that. SDY is an Aristocrats ETF as well, but they use this criteria, dividends of more than 20 consecutive years. So until they get that, if it becomes less than 40 that have that 25 consecutive years, they look at the companies that have increased for more than 20. Okay. And then if that's still not enough, then they go beyond that and add up to until they get to 40 holdings. So NOBL, the ProShares S&P 500 Dividend Aristocrats ETF, currently at the date of this recording, selling for $97.95 a share, has just under $10 billion in assets, expense ratio of 0.35, and not showing a dividend yield here. Where is it? Come on, Fidelity, don't let me down. Distribution yield right at around 2%, just under 2%. Price to earnings, 24. So a little on the pricey side, almost in line basically with the S&P 500, and not really surprising since it's mostly S&P 500 companies. FactSet gives this an A rating, Morningstar a 5-star rating. So let's take a look at the portfolio consumption composition here. And we'll see currently the index has 65 holdings. Top 10 holds 17.34, other is 82.66. This is an equal weighted index. It just runs a little off depending upon how the stocks move individually. So the top 10 has A.O. Smith, AOS, at just under 2%, AbbVie, McCormick and Company, W.W. Granger, Hormel Foods, Procter & Gamble, Sherwin-Williams, Automatic Data Processing, Colgate-Palmolive, and Lowe's is in the top 10. So what you're going to get with this ETF is exposure to 65 companies that are going to be mainly household names that have been around a long time, good, mature companies that just really just make money. And regional exposure, 95.4% in North America, 4.6% in Europe. Market cap, 55.75% are large cap, 42.85% in mid cap, 1.4% of small cap. And Morningstar rates this thing as a large value blend fund. No, sorry, not a blend fund, large value fund. Sector exposure, consumer staples at 20%, industrials at 20%, materials at 12.5%, healthcare at 11%, financials at 10%, consumer discretionary at 7.7%, utilities at 5%, real estate at 5%, info tech at 3%, energy at 3%, and communication services at 1%. So pretty rounded portfolio. With it having, the requirement of 25 years of dividend increases, you're probably going to be light on tech, light on energy because they've had a lot of dividend cuts as well. Communication services, just not a lot of stocks in there with long-term dividends. So, well, let's take a look at the performance of NOBL. Now, NOBL, I'm going to use ETF channel for this. I'm going to compare this to the SDY, which is that Aristocrats ETF that has 20 years as a requirement of paying dividends versus NOBL's 25 years. And we'll see how that stacks up. We're going to go back 10 years, but I doubt 10 years is going to show up because I don't believe this NOBL ETF has been around that long. So let's take a look. Let's let that populate. And we'll see, 2013, so over 8.2 years, NOBL has returned you an average annual total return of 13.36%. Not too bad, especially against the SDY, which is the 20 years of consecutive dividend payments increases at 12.2. So NOBL, like I said, what you're going to get here is an excellent basket of stocks. Around 65 stocks that are very stable, increasing income. Oh, you know what we didn't do? Let's take a look at the dividend growth. We didn't do that. NOBL, dividends. Current yield, 1.9%. Dividend growth rate, trailing 12 months, 8.98%. Dividend growth rate, 3-year compounded annual growth at 9%. And 5-year at 10%. So very respectable dividend growth rate out of this. Consecutive years of dividend payments, 7 years, and consecutive years of dividend growth, 2 years. So they missed a year. I looked at the dividend history. They missed that increase by like 2 pennies from like 2018 to 2019 or 2019 to 2020. So it was just a couple of pennies. I'm not going to fault them for that. But NOBL, excellent ETF to get exposure to all the S&P 500 Dividend Aristocrats. Now, if you enjoyed this, leave me a like, share, subscribe down below, comment, and we will talk to you later. Thanks. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.